Let's take a look at the inflation figures from Nigeria, hitting a new 28-year high as far as the 29.9% figure is concerned for headline inflation. Let's take a look at those figures. There they are, 29.9% across the board. Food, 35.4% growth. Their core inflation, urban, rural, across the board. Also the same story with month-on-month inflation. Nigeria's cost of living continuing to rise, 2.6% there for headline. Food at 3.2%. Same story, core, urban, rural, all there. Let's go to the Central Bank of Nigeria. We've got a couple circulars that were released on Valentine's Day with respect to cash pooling for international oil companies. So they're amending that cash pooling, which has to do with repatriation of foreign exchange overseas. The banks are going to pool 50% of that, and then the balance of 50% is going to be repatriated after 90 days. That's an interesting development there. And then on personal travel allowance and business travel allowance, no more cash payouts. The payouts now via electronic channels. We're happy to have Clement Izu of Financial Derivatives Company Limited, Head of Research. He is joining us now. Clement, good morning to you. Good to see you. Happy New Year.
Good morning,
where do we start? Inflation? That's one of your favorite topics. Let's start. Oh no, what do you want?
Let's start with what you're comfortable with.
Inflation. Let's do it. Let's do it. What do you make of these latest numbers?
Well, the number didn't come as a surprise because we have already anticipated that inflation is going to get that higher and is also going to get higher in February and March. The earlier expectation that inflation will turn the corner in the first quarter, events have changed and that won't hold again. Now, the thing is that, like I've said before, inflation does not grow old and die. So the way you tackle inflation matters a lot, and that has to do with what you understand as the driver of inflation. The earlier story that we are told, we are sold and told to all and sundry, discussed on the street is that it's Boko Haram and blah, 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 causing inflation. But over time, we've been happening this that we have bigger issues, structural issues, pushing this inflation beyond those things. And that has to do with, one, money supply. I've studied countries of the world from the 70s down. Every country that has excessive money growth, two things you must expect. One is inflation. Two is currency crisis.
Say a little louder. Two is what?
One is inflation. Two is currency crisis.
Aha, okay.
You can't escape those two. In Brazil, it happened in the 80s where their money supply was growing at an average of 890% per year for 10 years.
That's insane.
And their currency crashed by 75% per year for 10 years. When their money supply came down to 21%, the currency depreciation came down to 12%. And so when people say it's not unconnected to money supply, look at what happened since 2021 when money supply has been growing excessively because the money is supposed to use for production. So if your money supply growth is greater than your productivity growth, you're already in trouble. So when we had money supply growth of 20% in 2022, average of money supply growth in the year, we had currency depreciating by about 21%, right? In 2023, when we had the average of 30%, the currency depreciated. I'm talking about the parallel market, which is the market rate, right, by 26%. Now, in December, we had money supply growth at 51%. The currency depreciated in January at 34%. What is the correlation?
Okay.
So the same thing is happening to inflation because you have excess money pursuing too few goods.
Okay, but I do want to point out, if you look at the last treasury bill auction, it's higher. I mean, 19%.
That's a positive one, and that's what I'm saying, that it depends on, Warren Buffett said that in the business world, the rear view, the rear mirror is clearer than the windshield, right?
I like that.
And this one American humorist, Mark Twain, he said that it is not what you do not know that hurts you. He said, but it's what you do know, but they aren't so.
Right. Okay.
The issue, the fundamental issue, if you have excess currency crisis, weak naira, and you have persistent spiraling inflation, you cannot have low interest rate. So you must raise your because it's about the real rate of returns.
Right.
So the real interest rate was too negative, and you see what happened to your capital flow.
Right. Of course.
Last year.
Yeah.
It dipped to all-time low,
Yes.
600 and something million. We've never seen that in more than a decade, right?
Right.
Because nobody brings in his capital, so that affects your currency. And you know what happens is that once you have inflation and you are not doing anything about it, and then people begin to say, oh, money is losing its value. It's no more a good store of value. So they begin to pursue a currency that could be a stable store of value. And you see a flight to dollar, right?
Yep.
As that flight to dollar is there, you have weakened naira. As naira is weakening, there is a feedback effect again to inflation. And so you see that loop until you stop that motion, right? So the problem is entrenched. But I think the central bank is well positioned now. I think they're seeing a good picture of what the issues are. And have started to act. And I love what they're doing. We have the bombardment of circulars and all of that. Well, they're trying to address the issue, right?
You want to get to the circulars now?
You know, of course, because they're all intertwined, right?
Okay, so the oil one, for instance.
Yeah, it's like, you know, let me tell you something, Rochus. You have an economy. The economy is interrelated.
Yeah.
There's nothing in isolation. In elementary economic studies, you do partial equilibrium. Okay. But when you go to the advanced, you begin to concentrate on general dynamic because things are changing, right? As at the time that we devalued on June 14th, we didn't take a lot of things into the basket, right? And now those things are biting. And so the central bank is playing a catch-up. Better late than never. Right? So we need to address that issue because in Nigeria, we are already dollarizing unofficially. So why will somebody send you dollars through Western Union and you take dollars? Do you do that in the US? Do you do that in the UK?
Good question. Okay.
Right? Yeah. So they will give you dollars in the UK. If you send pounds to somebody in the US from UK, when it gets to the US, they give you dollars. They use the market exchange rate, right? So, and that's what central bank is trying to do. Now we're talking about the personal travel allowance. We have dollar cards, right? So if I don't need to give you fiscal cash. Right. So I disburse the money to your account. And then while traveling, you can book your flights, you can spend abroad with your card, right? So I think what the CBN is doing is to reduce that run for dollar, which is affecting the naira. But these things are temporary. These things are short-term weapons we are using. We need to begin to think structural because there are fundamental issues. Let me tell you something, Rochus. The farmland, arable land, Nigeria's arable land is 34 million hectares, right? Yep. Our agricultural export in 2022 was $1.3 billion. Ukraine was at war, peak of that war, right? They have 33 million hectares, 1 million hectares below Nigeria. They exported $28 billion.
They're wheat giants.
Philippines has only 6 million hectares. They exported $6.1 billion worth of agri export. We did 1.3. Where will the FS come from?
Good question.
Right?
Oil. It'll come from oil.
Then the oil we're even talking about. The oil we're even talking about, we have a lot of issues we don't even want to discuss around it. And the thing is that if we now begin to think productivity, you know, today we are running a palliative economy. It doesn't help anybody.
Palliative economy.
It's a palliative economy we are running. It creates more problems that it comes to solve. So we need to have a development plan. Nigeria is running today without a development plan. So anybody wakes up and does what he wants to do, and then we wait for the repercussion. And then we're in a cycle, right? So to deal with inflation, deal with currency, we need to go back to the drawing table. And we begin to say, okay, we do this in the short run, we do this in the medium run, we do this in the long term. So that in the next 10 years, because there's in economics, that's what they call the theory of the original sin. Yep. You know,
it almost sounds biblical.
Yeah, of course. The things you are seeing today didn't happen today.
It happened back then.
Look, in the past 8 years, we borrowed
it's something trillion now, yeah. If you add the ways and means together.
That's about 80-something trillion. Because it was 12 when Buhari came on board. There was no improvement in road infrastructure. In fact, Nigeria infrastructure stock declined. External reserve depleted. So poverty worsened. Today we have 31% extreme poverty and 63% multinational poverty. This multidimensional poverty, Qatar has 25 billion barrels of proven oil reserve. Poverty rate is 0. Kazakhstan has 30% 30 billion barrels of proven oil reserves.
Yeah.
Poverty rate is one. We have about 35, higher than theirs. Our poverty rate extreme 31%, multidimensional 63%.
We're competing with India, which is the most populous nation in the world for extreme poverty.
And we took over from India, and we don't even want to give them back. All right.
To round off, so you see a rate hike at the next MPC meeting. There's no.
If you do not do a rate hike, because you need to set a signal.
Right.
That signaling is even more important than what the rate is doing. So the signal is that you have to raise rate, and you have to give a forward guidance that we're going to do more. And so the market begins to adjust, liquidity begins to adjust. Once you're able to handle the issue of liquidity, then you're on the right path to tackle inflation and tackle currency crisis.
Clement Izu, Head of Research, Financial Derivatives Company. It's always a pleasure having you on the show, Clement. Thanks for joining us. Appreciate your time.